Good morning, one and all, and welcome back to another London session here on the Apex Brotherhood Trading Live. I'm your host, Richard Butler. Welcome. It's Tuesday, the 2nd of September. It is a nice day today outside here in South Africa. Hope that everybody is doing well. I'm feeling a little bit under the weather today. I don't know if I slept all that well. I think I did, but I woke up ever so slightly a bit stuffy. But that's a seasonal thing for me, so it is one of those things. If you're not yet in, everybody come invite everybody that you know, have them join. Let's have a party over here. Let's talk a little bit of trading. Let's talk a little bit about life. Let's talk a little bit about unlocking your hidden potential. Not necessarily just financial, but just hidden potential overall. All right. I'll just wait for everybody in stream to come and say hello, and then I'll talk to chat a little bit. But in the meantime, let's have a look at the chart this morning. So yesterday was quite a quiet day on most of the pairs that I have a look at in any way. Yesterday was a very consolidative day overall. But when you look at it in hindsight, it actually looks like it had some potential moves on both EU and GU, but they were a bit sporadic at some point. The majority of yesterday was actually a winning day, bullish for most of the pound and the euro. And then when we reached the London session, it kind of died down. Didn't really show much directional bias. It was ranging along a certain section. And then when it eventually broke out of this area, it just continued consolidating during the New York session. But that is what you expect when there's a US holiday. So, sorry, my throat is all like froggy today. All right. So let's have a quick look at GU today. So obviously yesterday, if we look at the hourly chart, there was some upward movement. It was slow going in my opinion. Normally, one would expect that during the London session, you have some participants. People are going to trade. The big industries are going to trade as well. But the moment you get to the US session, there's because it's a bank holiday. I think it was Labor Day yesterday for them. Everything quiets down. So it was like I mentioned yesterday. What do you expect to be on the other side if you were to enter a trade? How long do you expect to be in that trade? You need to adjust your expectation ever so slightly when you do enter a trade on a day where there's expected consolidation in the next session. Depends on what your strategy also is at the end of the day. But if you are an intraday trader such as myself, consolidative days can cause some unexpected movements in your trades. For argument's sake, if I decided I got an entry for a sell and then I consolidate and I'm running in drawdown the majority of the day, and then something happens and there's a little dip, I will be knocked out. So consolidation days, I tend to stay out of. So very high impact news days, if it is a GU, a pound news day, and if I'm generally trading within the London session, which is where the pound obviously is active, or the most active, let's rather say, the news itself can cause some really hectic moves, and if you are on the wrong side of it, it can really harm you. However, if you're on the right side of it, obviously you'll be smiling to the bank, as they say. But in this case, or in general, let's rather say, high impact news days, if it is a GU news, day, then I generally do not trade that portion of London session when the news has happened, and then I wait for the reaction to happen. Everybody to see, okay, this is the news, this is the impact. Let's wait and see where it goes, and then if there's a reaction after that, then obviously I will enter a trade if my setup presents. But if it's a US news event, generally the London session provides many opportunities for entries, for sells, and for buys leading up to the New York session's news event, which is usually just before the New York session opens, and then leading into the New York session, there is some red folder news as well. So days like that, I'm free to trade as I see fit according to my strategy. So yesterday, it was just one of those days where it was consolidating way too much, and then when it started getting closer to the New York session, I was already no longer interested in entering any trades specifically, even in New York session. Once again, I expected there to be consolidation, so there was just no point to be in the market at that point. But coming into today, we can see that from yesterday, we reached the high during the London portion of the day, the moment the New York session opened up, and that is where we plateaued. We did not go above that point at any point in time until the very end of the New York session. There was a little dip, well, not a little dip, like a very little nut, like a tiny little wick, a nudge above the high of yesterday, and then a little bit of consolidation, and then a reaction going downward. And now, as I can see on this hourly candle for the London Open is very, very bearish. So, as they say, don't catch a falling knife. Don't try and enter willy-nilly now. Wait for it to start its move, initiate its move, do a bit of a draw, a pullback, and then continue down if it wants to, and then you can enter. Down on the 15-minute, if I have a look, this demand area that I had here was just a 5-minute demand, which was the low point of yesterday's London session, where it broke. I'm saying broke, but that was the lowest point that it had, and then it moved above that point, and it never came down to test it until this morning. Now in the Tokyo session, and then anyway, so this upper supply area was the highest point basically that was reached throughout yesterday and this morning. So if I want to see continued bullish movement to continue what happened last week, I will have to see this supply area be broken, because it's showed that over the last, let's say, 12 hours, it's really been struggling to break through that area. But anyway, that is neither here nor there. What we can see has happened is it's broken below the Tokyo session, yesterday's London session, and then there's another Tokyo session over here, which it has also broken through. So you can probably not see it all that well because of the saturation, but that's the low of yesterday. It has absolutely shattered through it. Yesterday's low of the day open, it's shattered through that one as well. And then now we are at a 5-minute. Why is this not working? There we go. We are at a 5-minute base, which it has wicked into now, and it looks like it wants to absolutely shoot through it as well. So if it breaks through this 5-minute base area, we look for the very next area, which is down here. There's another base area right over there. It's also another 5-minute base area for the price to come and test if it were to break through this 5-minute area, which so far it looks like it's going to do. Is there any other area where we can see potential retracement within this section. So I know there's a lot of people that refer to these gaps, especially in high, let's say, like trending areas, as fair value gaps. Don't really care much for that, but it does seem like there is a lot of sellers waiting in this area to push this price down. Now, we can have a look at the news and we can see whether or not there was anything specifically on the news that could have caused this movement. So there's no high impact news as of this point in time. The 9 o'clock open was unemployment rates for the Spanish, or the Spanish unemployment change, and it was a little bit red, but that was euro. So why would you see it on GU? The only thing that I can think of is potentially that all of this impact of yesterday, nothing that I can see just straight up on the news. The only thing that I can think of is that this is that in anticipation of the rate cuts on the US, the dollar, which might be causing a bit of an influx into dollar strength. We can have a look at the DXY and see whether or not there's any. The DXY has been bullish since this morning. It is, on the hourly at least, it is trending upwards, making higher highs. It broke through the yesterday's high on the New York session, and then it seems as though it has broken through the high of the day completely of yesterday as well. So let's look at the daily. Yeah, it has broken through. It has yet to close, obviously. The day has just started. But on the hourly, it has wicked above, came down a little bit, and then started pushing up. There is definitely some bullish strength for the dollar at the moment. I am not entirely sure why. JPY has been bullish the whole of this morning. Yesterday and the day before was Friday was very sideways. It had made an attempt to go a little bit higher. It came down, made an effective equal low between Friday and Monday. So it seems as though there is a lot of bullish strength for the dollar. Let's have a look at gold. Are we seeing anything on gold? Gold made all-time highs. This was the all-time high of 3,500.2, and it has gone higher. What is the high on this? Let's just have a look here. 3,508.6. So it's gone even higher. Gold reached absolute new highs, and then I remember I said yesterday that if it were to take the highs, there will be some sellers sitting above this all-time high point on gold, which could potentially push the price a little bit lower. So in this case, it seems as though it has definitely happened as, let's not say as predicted, but as anticipated. Let's see, from the all-time high, how far has it gone down now? It has dropped $16 since the all-time high, the previous all-time high, and the all-time high of the new all-time high, it has dropped by $25. So there is definitely a lot of sellers, people potentially taking out. Let's say I'm saying people, but I generally mean investors in general. So it can be hedge funds, it can be banks, pretty much anybody. they would have taken their wins here. And it seems as though some people are, or at least some of those in the industry, are pulling out their investments out of gold and dumping it into the dollar at the moment. So that it's interesting, but it's also as expected, because usually after a day of consolidation, or in this case, like a low volatility day, with the dollar being a bank holiday, you will generally see movement. You'll either see bearish or bullish, and that is just because there's a breakout out of consolidation. And like I said earlier, it was actually not that consolidative on the pound specifically. It was moving upwards. It was just not volumetric. It wasn't momentum movements going all the way up. New York, as anticipated, was consolidative. Pound never tried to push higher than that local high, which was 3,500. It didn't try to push above it, and now it's absolutely tanked. It's pushed through this 5-minute base. It is wicked into the very next 5-minute base, and it's having a reaction. So it means that over here, this was Friday's movement. It seems as though on this point over here, we do have some buyers attempting to push the price back up again, trying to fight against the sellers. But let's give it a moment just to settle down. If there's anybody in chat that might have some information as to why the dollar has suddenly received this influx of strength, you see it on GU, you see it on EU as well. EU, not quite as hard as the as GU's moved. This is only 24 pips, where GU, I think, has sold off in excess of 70 pips. So usually it's like massive news events, or let's say, for argument's sake, like massive geopolitical impact. Like there's a war that suddenly happens, or there's some person that got assassinated, or whatever you want to call it. Like there's like geopolitical issues that generally move the market in this sense, or super high impact expected news. So unexpected news, war, that kind of like stuff, and then news that is expected, like CPI or unemployment claims or something like that, where you expect there to be big movements. My question is whether or not we are going to continue pushing lower, and at what point are we going to stop. On the 4-hourly, we do have an area over here with the full candle movement. We do have an area down over here which overlaps. Price moves out of the area, starts coming down, wicks into it, moves out, creating a new area, a new base. Let's not say base, a demand area, a support if you want, and then reacts off of it and moves again. But now it seems as though it is going to come back to come and test this new, well, the latest support area. And this was the old support area that has already been tested. But old support areas, you can have them happen many times. Like a support area doesn't disappear. If it was tested, you will test it again, potentially in the future. In this case, it seems as though we are testing it a little bit more quickly. This was Friday the 22nd was the previous low, or the first support, and then the second support was Wednesday the 27th. So yeah, Let me have a quick look at chat. Good morning, MGN. How are you, bro? The Davies brothers. Yo, yo, yo. Good morning, Mr. The Davies brothers. Any trades this morning as we break out of yesterday's garbage price action? As of right now, we are seeing a crap ton of sells, or in this case, dollar strength. So any of the dollar pairs, we're seeing dollar strength. On my specific strategy, we have yet to see a base. So for me, there isn't any sells as of this point in time. I don't see any specific news-wise for the dollar yet. Yeah. So this hypothetically is this is London opening up. It's a London. It's only been 20 minutes into the London session now, but London opening up and just absolutely tanking means that there was something that happened yesterday that was unresolved in the market. And the moment London opens up, now all of a sudden they're like, well, we see what we wanted to see. Now let's move. So let's go down to the 15. It's 6 more minutes or almost 7 minutes. And then this candle will close on the 15-minute. What does the 5 look like? Okay, the 5 is creating or has created a base. So I'm just going to remove this previous 5-minute one, and I'm now going to mark out a new base candle. This is a 5-minute base, but be careful. The problem that we have with massive dumps off like this is that if it were to confirm a drop lower, there is always more liquidity that sits here at the bottom and can easily just drive the price back up again. So high volatility days should be tempered with care. Just be very careful. If you're going to try and catch a falling knife, just remember that there is always the potential for the price to start moving back up again to try and retake any of the buyers that were sitting here trying to move the price up a little bit, or in this case, this area over here, this 5-minute. So we'll just take that one up. Let's have a look at EU as well. EU has also made a 5-minute base candle, and it seems to want to drop lower. It has broken through the demand and support point of yesterday. It has dropped lower than the day open. Let's have a look here. We have a 5-minute base area over here, and then we have a higher time frame support area way at the bottom. So let's have a look. See, this thing is absolutely tanking down. DXY, it is absolutely flying. I cannot see anything specifically that would have caused this. This might be it. UK 30-year yield climbs to 5.66%. That is interesting, but that was 6 minutes ago. This was more than 23 minutes into the London session. Yeah, that is kind of crazy. Tell me, Will, what do you see on your side? What do you think is the potential cause for this? For me, it is the idea of breaking out of consolidation. But I actually would have expected the price to go higher. I would have expected the dollar to show a bit more weakness. And it seems as though we're seeing quite a bit of dollar strength. You see, so if I were to enter according to my strategy right there, I would be running in drawdown for about 4 pips right now, because the amount of area that it needs to come and take up again is quite large. So it would be better for my strategy if the entry point was a little bit higher, so that I could at least cover the base with my stop loss, so that my stop loss itself is slightly higher than the base itself. So a better way to look at it would be if this was the reaction off of an established area and then attempt to come lower and then a push up higher, then that would be the trade. And then wherever my stop loss is lower than the most recent anticipated reversal or test point, let's rather say. So there was a potential for a trade there, but something like this, these massive candles are so large that when you do have a retracement, the retracement is much larger as well. So my strategy would have said enter here, but that would have been blindly, just like blindly enter here because drop base drop enter on the confirmation of the next drop, which is this candle over here. However, due to the size of the movement, the size of the retracement is going to be much larger than what my strategy can survive, let's rather say. Will is saying, I'm en route home from gym, so the only thing I've done on the market is take out my EJ buys as I posted in Discord. And by the way, bro, that was a really, really good trade, good profit. You stuck with it for more than a month. That's amazing. I don't have the clap, but I will give you a little hand clap there. Other than yours, first chart I'm looking at. Yeah, that is unfortunate. Yeah, I guess sometimes that's the issue with having a technical an analytical background rather than a fundamental background, is that I react to the price as I see it. I look at areas where I expect certain movements to take place. If I see a sudden move down, I'm expecting there to be some sort of recourse. I expect it to come back up a little bit, test and start moving down. I would have loved a trade like that. One can only dream. The problem with a trade like this is there's no area for you to let's rather say not area. A trade like this, the problem with a trade such as this one is this is a luck shot. This is one where a reaction has happened to something and you don't know what that reaction was or why, just as yet. Usually when there's a news event which is anticipated on the calendar or something, you can see the information. Like, for argument's sake, we have the ISM manufacturing PMI later this afternoon. If you see a move like this happening round about that time, it makes sense. But if there's no news event, there's and even this news was later than anticipated, unless this is what was just posted and the information was out beforehand already. An event like this is big market players just absolutely dropping the price lower. And if you try and get in, you don't know at what point it's going to start retracing. You don't know at what point it's going to attempt to go lower or higher. And how do you adjust your strategy in order to accommodate moves like this? That's what I say is the problem with trying to catch big moves like this as it happens. Because how are you going to adapt or change your strategy? So you can see, oh, it's moving. Would you have gone with your normal risk? As let's say you would have risked 1%, and would it still have been 10 pips or 20 pips or that kind of like thing? And then how are you going to adjust it to say, okay, am I over risking? What's the chance of it reversing and coming back? What's the chance of it continuing down? And if you don't have that information at hand, and so that you can quickly use it and utilize it in the moment, I think it's just better to not trade it, just to not be in it. Will says, I'm sorry you don't have the clap. That's good, mate, but the missus is over the moon. Yeah, I meant to say the clap soundboard, and the word soundboard just didn't. But no, I don't have the clap. Can you imagine? How would I explain that to the wife? All right, let's have a look at GU. GU has now pushed into that demand zone. It is a big demand zone. I wonder if I can um, just adjust it ever so slightly so that it is a little bit more. It could be down all the way over there. Let's see how that impacts. Okay, so we're still a little bit far away from that. There is one more section over here when the price started moving higher, which I think this might be the closer. Yeah, it did weaken over there. And yeah, so it seems as though this is the area that is a little bit more attractive to the sellers, or to the buyers at least, to try and move the price a little bit higher. But then again, this could also just be a little retracement and then a continuation down. So we've had the move come all the way down. We can retrace back into this 5-minute one and then potentially move down further. But that still needs to be seen, see whether or not this is the reaction that is going to be the longer term bias of pushing it lower, or if this was a shorter time frame downward push, or like a impulsive downward movement. And what we're going to do now is then we're just going to start shooting up, which I doubt. I doubt that will happen. I entered on the first RBR at minimum risk, minimum lot size, with a 5 pip trailing stop on UJ. So you've actually entered on UJ on the 5 or the 15-minute. So if it was the 5, then that would be the MGN. Is it the 5-minute? Because the 15-minute could have had this as an RBR. And then a 5 pip trailing stop on UJ. Okay, so you're going very tight with your trailing stop. But yeah, 5-minute, yes. Okay, so it was this one. All right. And then a 5 pip trailing stop. I think theoretically you probably just got knocked out now. And then when you're saying minimum lotto 0.01, so I think right now you probably would have been knocked out. That's 34. Yeah, you probably got about 17. So you got slipped. Unless you entered here. Yeah. So you entered one candle over from the RBR. So the RBR entry should have been on the close of this candle for a rally base rally, because it's a rally, then you make a base, and then you have the confirmation of the next rally, which is this candle. And then the moment it closes, you enter on that one, you set your take profit and your TP, and then you let it go. But I mean, 17 pips, man. Congratulations on that one. It's a shame you went in on such low risk, but then again, that is the idea when you are trying to chase a move like this, is that you shouldn't be over risking, and going with minimum risk just provides you the opportunity to get in on a trade and maybe lock up a very, very tiny win. It protects your account by you not over leveraging. And then thirdly, if you are somebody that struggles with FOMO or revenge trading or something like that, the psychological side of trading, if you have a FOMO experience, you want to get in on this, go with the minimum risk. The minimum risk is going to save you some potential heartache should this move decide to go against you. So the hindsight trading side of trading is always something that is going to have people think, oh, I should have done this, I should have done that. But hindsight trading, you're not going to learn anything from it if you're always looking at what I could have and should have done. Focus rather on what you have done. Focus on what it is that you decided to do and why you decided to do it. I believe that you will learn more from looking at your trading from that perspective rather than saying, in hindsight, I should have done this. Because if you have the should have a mentality, you're always going to wonder, but did I do the right thing? And the next day, then you'll go and look back and say, oh, yes, I did the right thing, or no, I didn't do the right thing. But focusing on what you did do and what led to you making that decision, that's where you're going to learn. That's where you're going to find yourself and your shortcomings and your strengths in trading. So yeah, this was a good trade. Potentially the 5 pip trailing stop loss was a little bit too narrow, especially once again, this is hindsight. This is hindsight because the trade did close. But in general, if you're going to have higher volatility, in this case, let's look at the size of this candle over here. The size of this candle is 20 pips. The very next candle, the confirmation candle, is 15 pips. You're effectively going 1/3 or 1/4 of the size of the most recent upward moving candles. Now, yes, there wasn't really any reversal candles, but if I start reversing, how much of a reversal am I expecting to see? Am I expecting to see just 5 pips for a reversal, or this candle itself is 20 pips? Within that candle, there will be upward and downward movements, but that's 20 pips of a candle, or 15 pips of a candle. 5 pips for a trailing stop loss might be under the amount that, or not under, like much less, let's say, than what the movement of one of the candles could be. So in future, if you do decide to take a trade like this again, potentially think about, if I'm going to have a bit of a movement or a retracement within the candle, is it going to be more than the 5 pips that I'm expecting to be my trailing stop loss, or should I go larger, 15 pips, 10 pips, 11 pips, whatever the size might be? Always take into consideration a trade like this. If there is a retracement, how much? So in this case, if you had entered on the RBR and you could have gotten 34 pips. Now, you wouldn't have known that, obviously. But if your trailing stop was, for argument's sake, 15 pips, it reaches 34, it retraces 15 pips, you're still getting out more, or you're still getting out the same amount as you would have with your 17 pip win, as an example, but you're still giving it a little bit more time to breathe. So hindsight, just something to take into consideration for your potential next trade. Laughing, yeah. Focus on driving. Stop looking at the chart and no TP. Yeah, you said that 5 minute, yes. It hit stop loss fitting. That is the idea, yes. AUG was my biggest losing AUG. August was my biggest losing month, so scaling down my manual entry risk size a lot and have my EA take its normal scaled risk trades. So on your EA, did your EA take any trades? It is Tuesday today, so I would expect your EA to have at least considered taking a trade. The question is, if it had taken a trade, would it have potentially taken the trade over here? Or would it have taken the trade lower down here as a, let's say, break and retest as such? In which case, you would have gotten your win immediately on your EA. So yeah, just MGN, just let me know whether or not your EA actually took a trade. Then we can Can congratulate you on that one. If it didn't, then them's the way it works sometimes. Gold has moved into this 15-minute base area. So just to show, it was this massive movement out that created the new high. It started pushing down or consolidating and started pushing down, and then it's come into this 5-minute base area of mine. We'll wait and see what the reaction is here. The break was before my trading time start, and the retest just didn't touch the Tokyo high. All right, fair enough. Unfortunate, but it is what it is. EU is still struggling to push past this 5-minute base. Let's have a look at the 5-minute on it. It is now making a bit of a retracement push back. Obviously, now in hindsight, if this trade was taken, it would have been a successful 1-to-1. But I don't trade in hindsight. There is no point in trading in hindsight. So the expectation, I think, for today is that we will potentially be going lower on the dollar, or on the euro dollar and the pound dollar, unless there is a massive reaction pushing it above this section here. However, I think I can adjust this one now. No, actually, I think I'll keep it in place because this is like a higher section supply area. I think this one over here is now no longer the first point of resistance. This demand zone over here. Why did it move now? There we go. This one has become a new supply zone, a resistance point. So the moment it breaks through it, it's now no longer a support point. It now becomes a resistance area. So price can potentially push back up into it, and then it could fail and then start pushing down. Or hypothetically, it could break back into it, push above, come down, and then try and hit that next supply area. It seems as though there is a little bit of slowed momentum down at the bottom here now. Now we need to see whether or not it is actually going to continue back down, or if it's going to retrace into the 5-minute and then push down again. But this is, once again, this is very large movements. So my strategy usually relies on the idea of a 5-minute, not 5, a 10 pip stop loss. If I had entered on this drop, it would have knocked me out immediately. So once again, this is just the idea of looking at the way that you trade and then being cognizant of the fact that large movements like this might not be the best for your strategy specifically. You might have to try a different strategy on days like this, but how would you know? How would you know that this was on its way? I just think that at the end of the day, it's a bit better for you to just stick to your strategy and only trade the markets that align with your strategy. Don't try and force it. Don't try and force trades because you see something is happening and you're like, "Ooh, I want to be in this. This is a good loss, or not a good loss. This is a good sell. I'm just going to enter willy-nilly." If it's not according to your strategy, save yourself the potential heartache. Save yourself the potential emotional feelings that you might have, and just stick to your plan. Just focus on trading your plan at the end of the day, especially if you've determined and you have back-tested results that your plan, your strategy works. If you have forward testing results of it as well, if my strategy works, this is how it works. Understand your strategy, and then days like this, don't try and force it. So yes, there was potential for a short. I mean, breakout traders that maybe wanted to take the sell here and put their stop losses just above the previous swing point, and then they just, I don't know, aim for a 1-2 or something like that. They'd be smiling right now. They'd be incredibly happy. But breakout trades happen so few and far between these days. I mean, here we had a breakout yesterday. There was absolutely zero breakouts. Yes, there was a breakout on Friday, but you need to be on the right side of it. So if you have a strategy that says, listen, I will enter the moment we have a break on the Tokyo low as an example, at a break and close, I put my stop loss just above the Tokyo high point and I aim for a 1-2. Something like this would have been pretty nice. It would have been exactly 1-2 to hit that. But let's say, for argument's sake, you have a day where you have a fake breakout, like for argument's sake, the day before it. There's the Tokyo low. There's the confirmation of the break on the 5-minute. I place my stop loss just above the Tokyo high. I go for a 1-2, and that is the 1-2 that you would have looked for, and you would have lost this one. Obviously, in a nutshell, this the specific one wouldn't have worked. But it's not the point. The point is not I'm not testing that strategy or anything like that or advocating for it. I'm just saying that if you have a strategy and you have back tested and forward tested results that prove your strategy is a profitable one when followed. So we're excluding the idea of psychology. We're excluding the idea of changing your leverage and stuff like that. We're just saying I am testing a strategy. I have hundreds of back tested trades and I have a few forward tested trades and they all align. Then follow that one to the letter. And then if you realize that on days like this one today doesn't really work that well, then if you see moves like this, then you would know from your back tested and forward tested results that days like this has a tendency to knock you out of your trade. But any other day that isn't quite like this, where you have, let's say, more reasonable breaks and more trend following instead of this impulsive moves, and those days happen more often for you, stick to the strategy that works on days like that. And then a day like this, you can half your risk or quarter your risk and then pick up your stop loss size as an example. So there's always areas for you to adjust ever so slightly on your strategy for days like this. But in my personal experience, days like this are too far between and they don't happen often enough, unfortunately. But it could be a good thing to have a strategy for a day such as today. It's important to realize that the market moves only in one of two ways. It's either consolidative, meaning it's ranging. So it's either jumping between 2 points consecutively. That time frame can be very large or small, or it's trending. It's going in one of two directions. It's either going up or it's going down. But something that I think people forget is like how powerful that trend movement is. A day like now, this is a very impulsive, very strong. There's a lot of momentum behind this movement. And then the question is, what is the driving force behind this movement? So consolidation is easy to see. Not consolidation. A trend moving up or down is easy to see. The question is, how strong is that trend? Does the time frame matter? Shorter time frame, higher time frame. You could be in a higher time frame bull movement over a year, as an example. But it could have, on the shorter time frames, you could have bearish movements, consolidative movements, and stuff like that within that larger time frame movement. So right now we are pushing a little bit lower than this, or not lower. We've tipped the very low of this demand zone. Let's have a look at the euro as well. The euro is potentially pushing lower. That is already 5 pip movement. So where, if I were to enter there, and aim for this bottom portion here, it would have to break this low here first before it can even consider reaching that point over there. So need a little bit more confirmation, even though I do think it might be going there. GU also, same thing, it's breaking lower. This is 2.5 more minutes before this one closes. What would my... See, this is the problem that I see with movements like this. These candles are so large, all of them, that for my strategy, it would be account suicide if I were to not, if I were to follow my strategy exactly. Though I do think that this might be a good potential. QJ, there's a nice entry point right there. Once again, rally, base, rally, double base, and then another confirmation of the rally. The DXY, also lovely, rally, base, rally, another base. You could have entered on that one there. Gold, we broke lower. We have a downward movement, drop, double base, drop, and then a triple base, but still showing lower. Another base, there's another entry point right there. For a gold short, that would have been lovely. You could also have entered on this candle here as well, but this is more... it needs to break through this 15-minute base, which it has now. So there's always the potential for it now to start pushing back and then continuing down, or it could just absolutely just tank down and then eventually retrace and then try something like this going down. GU has pushed all the way through this point, so this is now no longer an area. Let's mark up this base. There's another 5-minute base. It's another potential retracement area. GU, EU. Okay, this one we can remove. It's moved into that one there. Here's another base. 5-minute. There's the move down. So my strategy would have said that I needed to enter on that candle or on this candle over here. But I mean, I've already explained the reasoning why I'm not entering right now, because it's just the movements are so large. It just my strategy just would not survive this. It might work on EU, but GU, as we've already established over here, if I had entered and considered, we're not even talking about slippage, the idea of slippage, that one would have knocked me out, and then the very next one would have been a winner. So that's something I didn't even mention, is like days like this, expect slippage, expect a lot of slippage, because now there's a lot of interest in the market to start pushing it down. So if it were to move down to the point where if it were to move down to the point where it starts reversing, we might see the spread calm down a little. But other than that, I think the spread itself, you might have like maybe 1.2 pips of spread for trading now today. Let me just have a look, see. The spread actually doesn't look that bad. But just in case the spread is a little bit crazy. All right. This first hour has been quite interesting. All right, the Davies brothers, Mr. William. Good luck with your meeting, and then yeah, I'll see you at 12. 12 here by me, obviously 11 for you. So yeah, guys, I'll probably be ending the stream at 10. I'll be on the Fivers stream at 12 this afternoon, UTC +2, so 11 o'clock UK time. So you guys are more than welcome to drop in on the Fiverr stream as well. On this stream specifically, I would really appreciate it for everybody to just drop a like if you did like the content. It doesn't mean that you like the outcome of today's trades, just you like the content. Drop a like. Those of you that are new, drop a subscribe. That would be great as well. I know that it's still early days with the stream itself. Yes, today I didn't really wake up on the right side of the bed, to be honest. Feeling a little bit under the weather, but that's no excuse. The quality of the stream is definitely going to pick up. We are going to have a lot of future projects that we are currently working on that's still in the pipeline. So this is just the start. Do expect some hiccups and such in the beginning of a stream. But yeah, we are definitely trying to build the community. We're trying to build a very good vibes only, don't take ourselves too seriously stream here. And I think the point is that if you're going to join something like our stream, just expect there to be some fun and nice banter and talks like that. I am looking at getting a few guests to come and join us as well, which would be great. But yeah, up until then, just pitch up every day. Come and talk to me. Be in the chat. If you have anything that you want me to look at or discuss, we can do that. It would be amazing to have a guest or somebody that I can talk to. But yeah, other than that, thank you guys for joining us for this very short 1 hour stream. For those of you that did catch this the sell on GU and EU and potentially on gold, congratulations. You guys have more cojones than I do. But then again, I also think that sticking to your strategy is just the best way for you to be consistent. And I think at the end of the day, that is the most important thing for any trader, is to achieve consistency and to exercise caution and patience in your trading. Never force it. Never try and catch a falling knife. Stick to your plan. And at the end of the day, the results will come. And those results are going to be the result of hard work, patience, and temperament. So yeah, guys, thank you very much for joining me again. Tomorrow is going to be the last trade the last stream for the week. We're planning on doing just three streaming days a week to begin with, and then as we get more followers and as we get more guests and so on, we will extend that, and then we will potentially look at changing the specific trading times as well for the stream. So not necessarily going to be 9 o'clock or 8 o'clock UK time, London open. We might do it either a little bit later or a little bit earlier, depending on how people or what people are looking for. All right, MGN, thank you very much. Always a pleasure. We'll be here every time, life permitting, obviously. And then La Bosch. All right, bro. All right, guys, thank you very much for joining the stream. See you guys tomorrow, same time. Goodbye.